my exact execution framework using two steps. First step is finding the higher time frame bias, and my second step is using lower time frame IFVG entries. Now these are ICT models, so if you're not familiar, you can check it out in his YouTube channel, but otherwise let's get started. So the first thing that I want to know that where the market's going is that we have to understand where the high time frame bias is. So as we can see here, let me put on my indicator. As we can see here, the trend is going up, but I normally trade the 9:30 to 11 a.m. New York time. So as we can see here, during the European session, during the European time, price actually went down, wicked into this 1 hour fair value gap. And what is it showing? It's showing a rejection of this fair value gap, indicating that price is potentially looking to travel towards these liquidity zones here, known as buy-side liquidity. So it could be here, here, or here. So if we go down to the 15-minute chart, you can see as well, price went back down, respected this 1 hour fair value gap, and it's on the way up here. So I trade from the 9:30 to 11, like I said. So we're looking at this specific zone here, 9:30 to 11, and I'll be looking for my entries then. So now that we know that the high time frame bias is bullish, I'll be looking for longs only. So at 9:30 open on the 5-minute, there wasn't much happening here, right? You can see here, price obviously came back down, and price so slowly made a jagged move towards the upside, but still price was really choppy. And we can see also the nearest buy-side liquidity, drawn liquidity, is here. So if I was to put on my execution marks, I trade on this broker here, Fusion Markets, and if I was to put on my execution marks, now that I've covered step one, which is high time frame bias, which is bullish, because we know that, and I repeat again, we know that it's respecting this 1 hour fair value gap, right? I'm just going to leave it here for now, the orange one. So if we go down to the 5-minute time frame, like I said, we can see I did not execute until about 9:55. Why is that? Because I was actually monitoring price on the 1-minute time frame. So on the 1-minute time frame, why did I execute on the 1-minute time frame specifically at 9:55? Well, I said 9:55 before because it wasn't on the 5-minute time frame, but on the 1-minute it's 9:58. So we can see here, let me take this indicator away, but I'll put the 9:30 mark here so you guys know when I start trading. So we can see here, opened up, price went and chopped around, made a huge move towards the upside, creating a 1-minute bullish fair value gap. That's here. Okay, we call this 1-minute bullish fair value gap. We can see price went all the way up, came back down, respected the 1-minute bullish fair value gap, and also I saw a 1-minute total sweep here, also known as liquidity sweep. With that liquidity sweep in mind, price also created a very tiny 1-minute inverse fair value gap here, right? So let's make this blue, and we'll name that as 1-minute bullish inverse fair value gap. So we have two confirmations, three actually, according to my framework. So I always look for respecting, we go with the high time frame bias, which is bullish, so we're looking for longs only. And when we came down to the 1-minute time frame for a more surgical execution, and when I'm looking for my entry model, we can see that price came down, respected the 1-minute bullish fair value gap. There was also a turtle soup / liquidity sweep that was created, and also price confirms that it wanted to go up when it created and disrespected this bearish fair value gap, which is also known as a 1-minute bullish inverse fair value gap, right? So I opened up a trade here around here. Stop loss was below that inverse fair value gap, and I was targeting here, but initially my target wasn't here. I wanted to aim for a longer target here, because on the 15-minute time frame, this is the eventual price that price will look to want to reach. But I got stopped out at break even. So when price reached my level here, I pushed my stop loss up to break even and I got stopped out. That's fine. And you can see here, price continued to go back up. So that's my first trade. I got stopped out at break even. So if I move on to my second trade here, there was another opportunity for me to enter long. So we can see here, price did not break through this 1 minute bullish fair value gap. And also, if I go down to the 30-second, sometimes I use 30-second when 1 minute isn't giving me enough confirmation. So now we're looking at the second trade that I took. Okay, so we can see on the 30-second, price actually came down, respected this 1 minute bullish fair value gap, and quick displacement towards the upside. And this trade was made at 10:11. We can see as well, with that displacement towards the upside, it created a 30-second inverse fair value gap, 30-second bullish inverse fair value gap. And let's put a background of maybe purple here. So as soon as price disrespected this 30-second bearish fair value gap, which is also known as 30-second bullish inverse fair value gap, I open up a trade here, right? Stop loss below the fair value gap, and I was targeting also here, but I decided to take it off at about 1-to-1 because price was choppy, and you know, it could possibly try, and I was just following my rules, about 1-to-1 to 1.1.5. That's when I took it off. As you can see here, I took it off at this drawn liquidity here, which is the buy side, and that was my second trade. So basically executed based on this inverse fair value gap and also the respect of this 1 minute bullish fair value gap, and I took it off at the nearest liquidity zone here, which is the buy side liquidity. So that was my trade yesterday. But my key point here for this video is that this is my exact execution framework. There are 2 steps involved. The first step is to find the high time frame bias, and once you know that high time frame bias, you can use lower time frame IFVG entry models. It depends what you want to use, but I look for displacement, turtle soup, and the respect of a fair value gap. Ideally a high time frame one. So in this case, it was a 30-second inverse fair value gap respecting the bullish fair value gap here, 1 minute, and closing my trade at the drawn liquidity here. So I hope this video was useful. I'll be sharing more of these videos. If you guys want to see, drop a comment below on what your trading strategy is and what you guys want to know. And I'll catch you guys at the next one.